Okay, let's start. So, thank you everyone for showing up for this session. I'll just start off by giving a brief background of where we are coming from, and then we'll get into the details of what we are trying to do, and then we'll open it up for questions from all of you. So, just a brief background about my co-founder and I, Amit, my co-founder and I. Both of us started this startup called as Shuttle back in 2015. This was a marketplace for buses, trying to solve the problem of daily commute in India. And this was the largest marketplace of its nature globally. Actually, at our highest scale, we were functional in 6 cities in India. Were also catering to Southeast Asia, and it raised close to $85 million for the venture from the likes of Sequoia, Lightspeed, Amazon, Toyota, etc. And ran this business for close to 6 years. Peaked at a close to 100,000 rides a day. And then Amit and I, we exited the business in late 2021. And the thought was that somewhere there was this, sort of creative energy. We felt that, we wanted to start something else again. And then we started wondering, is that what is that the next thing that we could look at, right? And just like maybe all of you here, we were sort of witness of and beneficiaries of India's startup ecosystem, which was flourishing at that time. If you just go almost 10 years back, Flipkart became a unicorn, I think back in 2011, 2012, and in 10, 11 years we now have over 100 unicorns. So we were seeing the fact that there is a lot of sort of wealth generation that was happening in a startup ecosystem. And in fact, all around us, when we were running Shuttle, there were a lot of folks in Shuttle who went out of Shuttle while we were running, and somewhere after we exited also, to start something on their own. From the likes of Wheels Eye, which is a very big transportation startup based out of North India, um, to Code Crafters, which was a Y Combinator startup, I think class of 2022. And they had also raised money from likes of Dropbox founder, Instagram founder, to Battery Smart, which was in battery swapping space, which has raised reasonable capital from Tiber Global, and to the likes of Window and Middleware, which just started their entrepreneurial journey. All of these guys were Shuttle alums. So somewhere we were witnesses of their journey. We were looking at the fact that their companies were flourishing, and in some of them we invested in financial capacity, and I think in almost all of them we had emotional capital. So we were firsthand seeing that these startups flourishing, and of course all of us were hearing it news on some startups or the other doing well. um, so it was not just in Shuttle that we were sort of witnessing Indian startup doing well, but all around us. So we had this network that we were able to sort of develop over this course of 5 6 years amongst entrepreneurs, amongst angel investors, among VCs alike. And like I said, that we are seeing that there is so much of wealth generation that is happening here, right? But at the same time, we were witnessing that while there is so much of wealth generation that is happening, but it is still concentrated, in a very select segments, and it is not broad based. And we started looking at, is that why exactly is this not broad based? And it doesn't take long for one to realize that just from the fact that angel investing for a large part is financially quite prohibitive, because the ticket sizes are quite high. If I were to talk in Indian rupee terms, let's say close to 5 to 10 lakh could be a typical ticket size of investing in a startup. Plus the fact that when you're looking to invest in a startup, given the fact that the failure rate is so high, you cannot hope to make money if you just invest in one or two startups. You have to look to create a sizable portfolio, maybe invest in 10, 20 startups, right? And for you to invest in 10, 20 startups, it is not about that 5 lakh, 10 lakhs. Maybe it is about 50 lakhs, a crore, right? And that is certainly something which is financially taxing on most of us, right? And for someone, even if someone has that kind of a capital, for someone to have that kind of a deal access, to have access to 10, 20 good startups, right? So yes, you would certainly once a while, will have access to your friend who is looking to start up, or a colleague, but certainly, it is very unlikely that you have access to 10 or 20 such deals, right? And even if you have that, like, let's say you have that kind of a deal flow, for you to make investment in 10 to 20 startups, it takes evaluating maybe close to 50, 60 startups. So the kind of cognitive bandwidth that it requires for you to evaluate 50, 60 startups and figure out those 10, 20 select ones which are worthy of investing, that is certainly something which most of us cannot afford. Like, most all of us, or most of us, are not angel investors on a full-time basis, for sure. So these are the problems that we are seeing, because of which we felt that angel investing is not as broad-based as it should be. And that's where we thought of that, okay, seems like that there is going to be a lot of wealth creation that is going to happen in Indian startup ecosystem if we just extrapolate what has happened in the last 5 6 years to the next 5 6 years. But at the same time, angel investing is limited because of these reasons that I stated. So we thought of that, can we solve this problem? And that's how this idea of Misfits came about. And effectively, what we are looking to do is that, how do we reduce the ticket size? So let's say from a typical ticket size of 5 to 10 lakh, how do we bring it down to, let's say, about a lakh, right? So that it becomes more accessible. How do we make sure that we have access to those awesome deals where one would like to invest, right? And given the fact that we have this network of entrepreneurs, already having invested in a few startups ourselves, and having seen journey of a few, uh, and the fact that we have ran our own business for close to 6 years, we had this know-how of how to take a startup from 0 to 1 to a scale where a notable VC would be willing to look at it. So using those skills, how do can we tap into deal ecosystem which is much better than anyone else can offer. So that's the second bit. And then third, of course, like I talked about, there is just so much of cognitive load that it requires. You have to go and interact with the founder multiple times, go through a long pitch deck, understand the intricacies of the sectors, competition, etc., and then take a call, right? And it is possible that in a few sectors, I would have the know-how of understanding what it takes to sort of invest, but it is very unlikely that each of us would have all the knowledge, expertise, etc., required to invest in all the sectors. So we thought of that, okay, how do we solve for this problem? So we went about by creating a community where we got thought leaders from variety of sectors, investment professionals, techies, etc., on the same platform, and gave them with the tool and the an incentive structure for them to sort of share their views on startups of their interest. And effectively, instead of, as a novice, instead of sort of evaluating every startup myself, there'll certainly be a few where I would love to sort of evaluate and understand deeper about, but for the others, I just go and follow these thought leaders. So that's the kind of framework that we wanted to follow. So it becomes easier to make angel investment. One, like I said, that because the ticket sizes are much lesser than they used to be. Second, of course, we are curating deals, and I'll talk a little bit more about it as we move forward. And the third, that there is a community which has, these sector experts, professionals from variety of fields, who are sharing their views, positive and negative, about the startups, making it easier for you to follow them rather than trying to build your thesis completely yourself every single time. So that was the approach. We are very young. We just started 3 to 4 months back, and in this short span, we have done now close to 10 deals. Here are the select few that I would like to sort of showcase to you. And before I talk about these deals, let me just take a step back of what I was mentioning earlier. That how do we go about curating these deals and figuring out which are the best ones to sort of showcase to our community. So one basic filter that we apply to our entire deal flow is that we look for a credible, a notable VC or an angel. So that's the first thing. So at this point of time, we don't lead around. We look to follow a lead investor, and a lead investor who is credible, who is notable. Could be an angel, could be a VC, and that's the base criteria that we have for filtering deals. So we do not look at deals where there is no notable VC or notable angel. After that criteria is fulfilled, then there is a team, the deal team, that's internal, that goes and sort of interacts with the founder, tries to gather more information about the business, tries to build their conviction, and once they are convinced, and two things that I would like to specifically highlight that the team focuses on is that they do a thorough diligence on the founder, try to figure out what has his past has been, what are his achievements have been, what exactly is he passionate about, because we certainly believe that is something which is missing in the process of a lot of VCs and angels alike. So that and given the fact that we have ran our own business in the past, we are able to bring that experience here to just figure out what it takes, and does the founder really have what it takes to sort of build that company. So that's one. And the second thing is that we go deep into the product that the startup has created. And again, that is something which we believe that most of the VCs and angels do not necessarily focus on that. So you look at their MVP, whatever is the product, and not necessarily with this lens that it will be perfect, but somewhere to sort of go deeper into what their thought process is in building the product that they are building, and seeing that do we see that that is something which could be the next big thing, right? So there's a second filter that we apply, and that's a after this thorough founder and product diligence. If the team thinks that this deal is worthy, by applying these two filters, the first filter of having a notable VC or an angel, and then this filter, the second filter of looking at founder very closely and then figuring out whether it seems worthy of investing or not, then the deal is presented to the community. And then after that, the community also discusses the deal in details, figures out whether it is good enough for investing or not, figures out the things that they are not sure about, in accordingly interacts with the founder again to get answers to those questions, and then eventually everyone decides for themselves whether they wish to go ahead with the deal or not. So that's the third step. So you see the deals that are showcased here. The idea of showcasing these deals was somewhere reflective of the decision framework that we have used in shortlisting these. So one of the first companies that we invested was a company called as DevRev, which was started by Nutanix's founder Dheeraj. It was his second startup. This was backed by Lightspeed and Khosla Ventures, so absolutely star founder and star VCs. The other company that we invested in was called as Code Crafters. This was in edtech space, trying to teach developers very deep programming fundamentals. This was a Y Combinator class of 2022. This was backed by Instagram's founder, also by Dropbox's founder. So again, a very credible backing, and this was that's why we went ahead and listed this startup. Then there was this company called as Punt Partners, which had a serial entrepreneur. This was also in the news. Maybe you would have read about it. It was backed by the likes of Ashish Rajani, Kunal Shah, even Anupam Mittal. So very credible backing. So we went ahead and listed this. And one of the companies which we recently closed was a company called as PyStars, which was in real money gaming space. It basically was in fantasy cricket exchange. This was backed by the likes of Cherate Ventures, formerly known as IDG, and Leo Capital. And we participated in the same terms and same round as these guys did. So this was these are some of the select few startups that we have participated in. Now we have sort of invested in close to 10 startups. Like I said, that while we are just 3 to 4 months young, we already have a community of over 300 members, very select curated community of folks from various facets of startups, including angel investors, entrepreneurs, techies, finance professionals, a lot of CXOs, a lot of senior professionals across a variety of startups and corporates. And like I said, that we have done close to 10 deals while keeping the quality of the deal high, and applying that framework in this short span of 3 to 4 months. And of course, we are just getting started, and now is the time where we are looking to grow further, and that's why we are kind of talking to you. So this is broadly what I had to share about Misfits. Now I'll be open to questions. If there are any, happy to take those.
Hi Dipanshu, I just wanted to share some questions that we got in the chat and from the others who are participating. So the very first one being like, how is Misfits different from others? So like there are other ventures out there doing the same thing or the similar thing. How are you different in that case?
Yeah, yeah. So absolutely fair question. So you would see that there are a lot of angel networks. There are a lot of offline syndicates which are kind of claim to be doing what we talked about. But some of the things that we are looking to focus big time on. So this is my reading of what some of those networks are trying to do. Effectively, they are trying to carry out the logistics of angel investing, which means that they help you sort of source a deal, and after they have sourced the deal, then they sort of help you make the investment after you have made the decision and all, and then they sort of help you with the logistics of that process. But none of those networks or none of those syndicates are actually helping you with the decision making, and that's the absolute key thing that we are looking to sort of add value to. So it's not just logistics of sourcing the deal, it is about sort of having a look at the views that different sector experts have, unbiased views about from different sector experts, which kind of helps you build your own thesis about the startup, and gradually going to a point where you are sort of backing a particular thought leader rather than sort of trying to build your thesis yourself, and having that collective view allows you to take those decisions faster. So somewhere we are looking to reach a stage. Of course, it's not there right now, but over time, where it becomes very very easy for you to make an angel investment, like almost like a right swipe or a left swipe, or maybe even less than that. We're just created a criteria like something like that. If this guy is investing and this guy is investing in this sector, then just take a small ticket size and go ahead and make the investment. So that's the direction that we want to go into. So somewhere the most critical metric that we are chasing is how can we reduce the time, of course, along with while maintaining good returns for you to make that angel investment, in which I think there is no one else who's trying to do that. The second thing is that we are looking to build this as a platform. We are not looking to build an offline angel network or a syndicate. We're looking to build this as a platform, which means that one, of course, we are creating tools, etc., for ensuring that kind of an engagement, that kind of intelligence that gets created on the platform. And second is we are incentivizing the community to do these various functions rather than doing all functions ourselves, and helping them with the tools to do as such. So, for example, right from sourcing the deal to deal evangelization to going down to structuring everything, we are involving community members to do that, right? And that's the direction that we wish to sort of head into. So that's how we see ourselves to be different from whatever else that's out there.
Okay, I hope that answers the question. The other question that we received is like, how are the investments structured? Like, what are the vehicles you use? And
Yeah.
do we go on the cap table? And like, what are the instruments used? If you can talk about that.
Yeah. So first thing that I would like to highlight from a regulatory standpoint is that we are not trying to do any innovations there. This is something plain vanilla which was happening even before we came in. So this is absolutely in compliance with all laws that are there, and I'll just explain how we go about it. So in India, when you are making an investment, pooling money and making investment in a startup, you need to do it through an AIF, alternate investment fund process, and that's exactly what we do. So we have a partner AIF, alternate investment fund, who has that license, and they create a vehicle, a scheme basically for us to make an investment in a startup, and this is all SEBI approved. So once that scheme is created, that vehicle gets created, all the investors who have decided to put money in the startup, the money is pooled in that vehicle, and that vehicle actually makes the investment in the startup. So the vehicle is the one which goes onto the cap table, and everyone pulls in money through that vehicle. And like I said, this is totally SEBI approved. This is totally licensed, and there is nothing new that we are doing here. This is something which is already happening. If you would see it happening on other platforms or through a syndicate, this is a typical process that's followed. So there is no changes here from our side.
Also, like, what are the instruments used? So someone asked about whether it's the CCD, ESOP, CSOP, or CCPS. What's the exact instrument we are using here?
Yeah. So again, on the instrument front, there is no there is no regulatory engineering involved here. So we are in most of the cases it varies from deal to deal, but most of the cases it is plain simple equity. There is no consumer ESOPs or anything of that sort instruments which fall in gray area. This is plain simple equity, and like I said in the earlier bit, like in some of the rounds that we have participated with some of the known VCs, it's actually in exactly the same terms. So whatever instrument that a VC gets, we get more or less the same instrument in some of those cases. So while it varies from deal to deal, but it is typically equity.
Okay. So there is one more question around like how many deals a member should expect in a month or week? Like what's the typical timeline?
Yeah, yeah. So
And if you can, and also the follow-up question is if you can talk about the process of deal listing, how it comes, how they will be able to see and all those things.
sure, sure. So right now, primarily, all the deals are listed on our app. So you need to be a member of the community to access that app. And so you can sign up on the website. There is a link there, and if required, we can certainly float the communication on how to sort of become a member. After you become a member, then you will have access to the app. And on the app, you will see all the deals listed and also all the deal activity that gets listed there. Um, so you will find all the deals listed there and all the discussion corresponding to that deal. Right now, we are hosting it on Slack. So on Slack as a discussion forum, you will see how wherever the deal is being discussed, both positives and negatives about the deal, and then you are free to sort of make a decision yourself. Of course, in the decision making itself, apart from the fact that there are different community members who would have shared their own views, positive or negative, about the startup. We also sort of collate questions that the community has come up with for the founding team to answer. And there are cases we also organize for sessions with the founders or folks from within the community to discuss the deal, and then accordingly take a call. In terms of the deal flow, typically you should expect 3 to 4 deals a month. So typically, let's say one deal a week is what we kind of target, but of course, without compromising on the quality, like I said earlier, with those three basic filtering, and it's only after that that the deal gets listed. So we would have possibly gone ahead and accessed maybe 100 odd deals, but only 4 to 5% of those deals are actually something which we eventually share with the community.
Okay, so other question is around so someone who is part of some other network also, he is asking like how much do you charge to be a member? Because he mentioned like the others are charging in the range of some thousands bucks. So how do you charge? Like how can one be a member?
Yeah. So, so there is a small membership fee, $20 for the whole year. So this is as little, as it can get, and there is no compulsion to invest. So it is for you to decide which deals you are interested in, and of course, we are very hopeful that you would like, if you are serious about angel investing, then you will certainly like some of the companies that we are bringing on board. But it is entirely your call of where do you wish to invest. And if you are looking to make an investment in a particular startup, then the terms vary from deal to deal, but typically there could be a small participation fee, which is in the range of 2% to 5%. And then there could be a carry component, which could be up to a max of 20%. So anywhere between, let's say, 10 to 20% carry could vary. And it's a combination of those two. So obviously, if there is a higher participation fee, there will be a lower carry and vice versa. Having said that, not all of this carry comes to Misfits. It is like I said that we are incentivizing the community member to help with sourcing of the deal, to help with evangelizing and structuring the deal. So after if there is a gain in a particular investment, then this carry component is something which is shared with people who added those values, and details is something which we can share offline. But this principally that's what we follow.
I think someone is. asking about the minimum ticket size. I think you mentioned somewhere,
Yeah,
but I think that was not clear. If you can just
sure.
repeat that.
The minimum ticket size right now is around a lakh. So $1,000 to a lakh you can assume. For companies not registered in India, it's around $1,000. For companies registered in India, it's around a lakh. But we are working, very closely across the board to reduce this ticket size further. But yeah, right now it's around a lakh.
And where are like typically these companies based out, or like
Sure.
what's your plan? Like which demography you want to invest in?
Yeah. So almost all the deal flow is of Indian companies. When I say Indian companies, these are certainly companies as in founders, uh, Indian origin founders or founders based out of India. There are certainly cases like in certain sectors like SaaS and all where companies are not incorporated in India. So they may be sort of developing out of India, but they may be focusing on other developed markets. So in certain cases, those companies could be registered in Singapore, in US, and all. But for a large part, most of these companies are based out of India.
Okay. And what about the sectors? Like which sectors do you invest in?
Yeah, yeah. Sorry, I forgot to mention this. So yes, we are totally sector agnostic, but we are certainly looking at opportunities where tech creates a big leverage. So that's one basic filter that we apply. But other than that, we are sector agnostic. So right from like some of the deals that we have done, you look at these right from real money gaming to a deal that we did in two-wheeler lending space to D2C enablement to startup in ed tech to one in martech. So we have done all sorts of sectors. So we are completely sector agnostic, but of course we look for companies where tech is a big leverage. Great. Any other questions that you have?
Yeah, I think there was one around the deal selection process, but I think that you covered already. So
Sure.
maybe you can skip that.
Okay, great. So feel free to, there may be more questions. You guys feel free to sort of share those questions offline. And thank you so much for taking time out for this. Really, really appreciate it, and would love to sort of see you in the community soon. Thank you so much. Thanks a lot.
Yeah, yeah.
Thank.
Thank you.
Bye.